news right now, and if you're wondering why some insurance stocks are in trouble today, here's why. The Insurance Bill 2025, which will be presented in Parliament, proposes to empower IRDAI, that's the regulator, to cap agent commissions through regulations, tightening oversight on payouts and disclosures. IRDAI will decide commission limits through regulations. The bill also authorizes IRDAI to prescribe limits on any commission, remuneration or rewards payable to agents or intermediaries. Shrimi Chaudhary joining in with more details on this. Shrimi, this is a departure from what the first cut of the bill seemed to have?
So clearly the main crux of the bill was to hiking the foreign direct investment, but there are certain key structural reforms which we have been reporting has been rolled back, and this is coming as the part of the final draft. What changes which has been proposed is actually that the bill tightening the restrictions on the commission-linked remuneration at the management and control level of insurance companies. It prohibits insurers from being managed or directed by any person whose remuneration is linked to commission or any sort of bonus or valuation surplus. But the bill also highlighting that this will apply 1 year after the bill comes into force, is what the bill actually saying, the draft of the bill actually highlighting this fact. And Tamanna, if you see what was happening so far is that the commissions were already regulated by IRDAI, which is the insurance regulator, but it was mainly through a patchwork of rules across products and intermediaries. And in fact, there were different caps applied to different products. In fact, upfront commission in life insurance remained high, and especially for traditional products were raising concern of mis-selling. So these were the issues which government tries to sort of fix those loopholes they are trying to fix through this bill. And in fact, it says clearly in one of the paras in the proposed bill that this authorizes the insurance regulator to prescribe limit on any commission or reward payable to agents or intermediaries, along with the rules on the manner of payment and mandatory disclosure. So this clearly giving regulator flexibility to tighten or relax commission structure based on the market condition and policy holder interest. Tamanna?
In the interests of the policy holders, that's such an important set of words out there. Shrimi, thanks for bringing this to us. So viewers, net for any insurance intermediary, this seems to be a bad piece of news, and which is why I think we're seeing PB Fintech correct a bit. We should bring up the other insurance stocks. I doubt that they would have maybe very large cuts, but for the fact that, because I don't think they earn as much of distribution income out there. PB Fintech is down, but if we can pull up a life insurance company or a general insurance company stock as well, I doubt there the damage would be too high. In fact, HDFC Life is in the green, by the way.
Yes. Because their costs will come down if they have to cap commissions. I wonder how an LIC is also responding today. It'll be positive. Look at Aniva Bupa Health, which is why. It's the agent which is suffering in this
And on the listed side, one agent out there, which is PB Fintech.
Yeah.
We don't have anybody else out there. But this should be net very positive for the end consumer. I'm guessing the amount that was paid to the distributor will now get passed on to the eventual customer. That would ideally be the hope, because it is mentioned out here that the authority may, in the interest of the policy holders, limit the commission. So you will probably see the benefits coming into you, me, Tamanna, and everybody else who buys insurance products at the expense of the distributor, which might have been earning a high commission. Now, let's wait and watch how this shapes up. This is not a done deal as yet, but this certainly seems to be the way this piece is going.
No, so this is what is going to be presented in Parliament. Doesn't seem to be too many regulatory or political hurdles to it in that sense. So yes, of course, it will follow the parliamentary procedure, etc. But with the numbers as they stack right now, what the government brings, there doesn't seem too much of a hurdle to actually get this not going through. Also, if you look at the overall push that the government has had, even through GST, etc., is to increase the insurance footprint, right? And to have more and more Indians insured largely. So it's the PB fintechs of the world which will actually suffer more than anything else. And, you know, we had a few comments from the insurance regulator to NDTV Profit, especially on the increase to 100% FDI, where IRDAI did tell us that the measure was overdue and it's high time to increase it to 100%, possibility for more insurance companies to start operations in India, which will be good. No need to search for Indian partners for insurance business in India. Ironically, PB Fintech had also told us over the weekend that more players with good capital is great for the sector. Product innovation is very strong in India, and great news from Policy Bazaar's point of view. We welcome people with long-term view. India is large enough market for everyone to succeed. This is on the 100% FDI part. Having said that, the other side of the story becomes a pain point, doesn't it? Because if you're going to cap the commissions, at least for a PB fintech, it becomes a pain point. And that is going to be one company which will see some pain. Also, there may be, and I agree with you there, Neeraj, there may be some pushback from the large community of insurance agents. I mean, it is a mode of livelihood for a large number of people across this country. So maybe you might have some pushback from there. But as more and more insurers also start distributing digitally, and that uptake continues, there may be some pain coming in here. Nevertheless, you're seeing PB Fintech with the most pain and not so much to the other insurance players, isn't it?
Yeah, so nothing there. Well, hopefully at the end of it all, from a very selfish perspective, we, the policyholders, will benefit from this. Let's wait and watch, because the essence of whatever we've read and whatever Shimi spoke about and whatever is on your flashes seems to be that this should be done in the interest of the policyholder. So let's see. IRDAI, of course, when they spoke to NDTV Profit, said that the measure was overdue, high time to increase it to 100%, possibility for more insurance companies to start operations in India as well. Well, in some sense, that is also a kicker, because remember, India has just given the permissions for 100% FDI in insurance as well. So pretty interesting. All that is happening in this ecosystem. We should be getting somebody from IRDAI, but I believe Aditya Shah, founder of Hercules Investment Managers, is out here with us on the phone. Aditya, can you hear me?
Yes.
Okay. Aditya, thanks so much for joining in. You heard the basics that in the interest of the policyholders, the regulator may change the commissions. How negative is this for a business like PB Fintech?
This is absolutely negative for an agent, such as an agent or a broker, as PB Fintech is, because their entire model is based on commissions, and a lot of insurers pay very high commissions to a big player like PB Fintech. So from my perspective, this is negative in the shorter term for PB Fintech. However, I don't feel that the regulator may have too much power to curb commissions, because curbing commissions would then mean that the growth of the insurance sector may get hurt in a longer period of time. Mind you, the insurance sector has moved to the health insurance side of the sector has moved to a 1/n type of a commission, where on multi-year policies, insurance companies do pay out on a yearly basis, not upfront. So from my perspective, there could be some tinkering of the model, which could be negative for players like PB Fintech in the shorter term. However, in the longer term, I don't think that the insurance regulator will have too much power to curb insurance commissions. If they do curb so, it could be negative for the growth of the insurance.
Let's pose that question to Mr. Nilesh Sathe. He's former member of IRDAI, Johnson on the phone line. Mr. Sathe, great having you. Thanks for joining in. What's the genesis of this? India has made a lot of sweeping moves on the insurance sector, including the 100% FDI. But this potential authority to the regulator to decide, curb the commissions given to policy agents. What's the genesis of this, sir?
No, I don't know why specifically it should be mentioned, because earlier the commission regulations were already there. They were subsumed in expense of management regulations only quite later. So IRDAI has authority to decide the commission rates. So I'm not quite sure why this specific amendment has been made. But given the authority now, they will have to come out with regulations, because earlier there were no commission regulations. At present, there are no commission regulations. They are already subsumed in expense of management regulations. So with the amendment in the Act, now obviously regulations will have to be framed by IRDA on commission. On what line of business, what is the maximum commission that can be paid, whether upfront can be paid, with what will be the renewal rate, renewal commission rate and all that will have to be specified by IRDA in the regulations.
Got it. Mr. Sathe, sorry, you may or may not have read it completely, but would love your opinion on this. Yeah, so would love your opinion. What this says is that the authority may, in the interest of policyholders, specify by the regulations the limits of any commission, remuneration or reward in any form payable to an insurance agent or an intermediary, which seems to be that the remuneration will now have a cap.
Yeah, you are right. Actually, earlier also remuneration had a cap, like not more than 30% can be paid. Now some were paying 20% also, but some were paying 30% also. So this is commission regulations. What I understand is government wants commission regulations to be again introduced by way of regulations by IRDA, which they don't have at present, which will specify under which line of business what will be the maximum amount of commission, that is the rate of commission that can be paid, whether it should be upfront, whether it should be loaded later on, that is deferred commission. All that will have to be decided by IRDA, and these regulations must come in place within 6 months of passing of the Act.
Okay. So, as we understand it, there is going to be a re-look at this, and clearly maybe those caps will be brought down. Maybe there will be more parameters for those caps to be fixed. Aditya, I heard you talking about the impact on a PB fintech, obviously in a negative light, at least in the short term. What about insurers and listed insurance companies? Isn't this a positive for them? Will costs that they spend on commissions go down?
Tamanna, I want to clarify before I come on to your point. I want to clarify that insurance companies have continued to flout the maximum commission norms that IRDAI and the regulator had floated. For example, on the health insurance side of it, companies cannot pay more than 15 to 20% of commission, but the insurers tend to come out with contests and other ways to monetize agents. So even if the regulator does put in some caps, the insurance companies will try to find some way around it to give commissions to agents. That is the ground reality today. That is the ground reality on the ground that is really happening. Now, if the commission rates are brought down, obviously the expense ratio, which the IRDAI has said has told all the insurers to come within some parameters. That expense ratio parameters will be hit faster for the insurers, and their expenses obviously will go down. Now the point is, if the insurance business, be it life insurance or be it on the general insurance or the health insurance side of it, if the commissions are brought down, it remains to be seen what is the impact on agents. How do agents push growth going forward? So this is in line with the regulators. The regulator is trying to bring down the commission rate. However, I think that the industry will find a way to monetize agents in other ways so that the growth for the industry does not stop and it moves on. So net, I think in the longer term, this will have very little impact first.
Okay, point taken. Aditya, if I just wanted to ask you a stock-specific view on a PB fintech and say a Niva Bupa right now, both at the other end of the extreme in terms of how they're reacting.
On the health, Niva Bupa being a health insurers have their own set of challenges in terms of claims and expense ratios coming up. Niva Bupa did report an underwriting loss this quarter as well. So health insurance, a lot of challenges are there. Though this news is positive, and the GST removal was also positive. In the longer term, the outlook for health insurer does remain really very difficult. We've seen Star Health doing horribly in the last 3 to 4 years. Of course, on the PB fintech side of it, any reduction in commission, there has been a reduction in commission because of the GST norms, where ITC has been passed on to the commission or to the agent. So that is negative for PB fintech in the longer term, but I don't think this will impact PB fintech in any way in the longer time.
Opportunity right now for a PB fintech, but do your due diligence. We're not making any recommendations here as NDTV Profit. Aditya Shah, thank you so much. Mr. Sathe, thank you so much for joining us as we break down this news coming in. A big change in the industry right now.